Good evening. Thanks so much for tuning in. This is the Money Show on ET Now, and my name is Alex Matthew. This show gets you everything that you need to know about your money, how to earn more of it, how to invest it wisely, and also how to spend so that you get the best bang for your buck. Now, we've got quite a lot lined up for you on this program, but before we get to that, let's focus in on earnings. It is earnings season after all, and we've got Larsen & Toubro to talk about. The headline numbers coming in, consolidated net profit after tax for the quarter ended December 31st coming in at 2,055 crore rupees. That's a decline of about 17% on a year-on-year basis. The top line stood at around 39,563 crore rupees. You have the company having bagged orders worth just over 50,000 crore rupees. I believe we have Avan joining in to give us a little bit more detail on it. Avan, what are you picking up?
Well, it's been an inline set of numbers for L&T this quarter. They have delivered, as you said, a profit of about 2,054 crore rupees. That's down about 17% on year. The lower other income post the deleveraging has restricted growth on that front. Consolidated revenue growth has come in higher by 11% on year, 39,562 crore rupees. In terms of the EBITDA performance, that's been higher by 6% year-on-year, in line with street expectations at 4,529 crore rupees, with margins at 11.4%. The company's order book as of December stands at 3.4 lakh crores, which is quite impressive. And remember, the street was penciling in a fairly healthy order inflow of around 40,000 to 45,000 crore rupees, and they have managed to deliver on that front. In fact, a little bit exceeding expectations at 50,359 crores, but on a year-on-year basis, it's down about 31%. In terms of the segmental revenue growth, we were expecting the infrastructure segment to drive growth, and it has 16% higher on a year-on-year basis at 18,345 crore rupees. You've seen the power segment as well deliver a growth of about 19%. Heavy engineering has seen a decline year-on-year of about 7%. You've got the defense segment, which has seen a decline of 23% year-on-year. The hydrocarbon segment posted revenues of 4,880 crore rupees. That's recorded a growth of about 11%. Execution activities on their onshore domestic vehicle has driven this growth. IT and tech has seen a growth of about 29% year-on-year, 7% sequentially at 8,397 crore rupees. The financial segment as well has seen a decent segment EBIT to about 434 crore rupees. So most of their segmental growth as well has been fairly healthy this time around. The order inflow as well within each of the segments has been fairly healthy this time around. So across the board, you could say that all of their segments have seen a pretty strong growth. In terms of some of the orders as well that the company has bagged off late, they secured the biggest EPC contract for the Mumbai-Ahmedabad Speed Rail. In the infrastructure segment, they've received various orders within the hydrocarbon, offshore, metro, rural, water supply, minerals, metal, public space, etc. Within the infrastructure and power and distribution space as well. And their international orders are about 41% of the total order inflow at 20,520 crore rupees. To be specific. So all in all, it's been an inline set of numbers. Of course, the street will be watching for the management commentary in their conference call about half an hour from now.
For that, Avan. In fact, we are joined by Arafat Syed, who is the Assistant Vice President Research at Reliance Securities. Arafat, thanks so much for joining in. Avan's very succinctly described all the numbers, inline set of numbers. What stood out for you, and what specifically will you be looking forward to in the conference call by the management?
See, if you look at the numbers, are largely in line expectations. Revenue grew 11%, exactly in line expectation 395 billion. Similarly, margin also largely on track, and so is the case with profitability. As expected, order inflow again jumped significantly to over 50,000 crore, including the domestic ordering of the Mumbai-Ahmedabad Speed Rail. And we are quite bullish on the stock, and again, more on the call, we will get more data about what exactly the next year look like, and how much is the growth we can sustain on a high order book of almost 340,000 crore. And again, what are the major things we are looking to Again, the Hyderabad Metro is the main concern, and the company is rightly on track to exit from the business. So we'll get more clarity on the call that when and where that would be happening.
Gaurang, let's understand how exactly you're looking at the overall numbers this time around. It's pretty much in line with what we were penciling in, with a revenue growth of about 39,562 crore rupees. The infrastructure segment has definitely aided the growth. Anything that stands out in the Q3 numbers?
Evening, Avan. Well, definitely in line with what even we had penciled down. I would just like to mention one thing, Avan, that when we are talking about cap goods engineering space, especially a big company like L&T, quarter-on-quarter comparison, I don't think it would be justified, because L&T is into various businesses, as we all know, whether it is complex turnkey business, hydrocarbon, infrastructure, and other related businesses. In all these businesses, Avan, there is a time gap, and especially after the backdrop of which we all are coming out with respect to this pandemic, I think the run rate should improve of execution. Undoubtedly, L&T does command a very strong order book, but equally important for the company is to execute that order book and translate it into revenue. And that's where I believe L&T has an expertise. A blanket disclosure over here, we have been maintaining a buy call on L&T for a pretty long period of time. I would like to hear how the business is shaping up as far as the defense related investments that they have done, and how that is coming up, and what are the kind of orders over there, and how much more is expected from the government side with respect to defense FDI that the government had opened up. But yeah, impressive set of numbers. 2450 is the target that we had penciled down. Since the numbers are just out, we would need a little bit of more time to revise the targets in case if there is any credibility.
Okay, thank you so much, gentlemen. Avan, for joining in and for putting those numbers into perspective. What are the stocks to watch in trade on Monday? Larsen & Toubro. Let's get on with the conversations on the money